Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is January the 26th, 5:45 a.m. Let's get to what we're going to talk about today. We're going to talk about, do we have markers that would signify that we have a bubble? I had a great conversation yesterday with a young gentleman, 27 years old, really nice kid. His name is Christian, and he's talking to me about the Reddit crowd and YOLO trading. If anybody knows what YOLO trading is, can you pop into the chat box? I want to see how many people know about it. I laughed my you-know-what off. So we're going to talk a bit about markers in the market, YOLO trading, and where are we at in this market cycle in terms of margin debt and in terms of new valuations that Lizanne Saunders shared on Twitter yesterday. And she has a different measure than what I've been using, which is the PE Schiller, but still consistent. Just another barometer for how expensive this market is. And we'll talk about the rise in volatility. We saw yesterday some major volatility that was reminiscent of when I was trading the markets back in 1999 into 2000, which was the dot-com bubble. And then we're going to talk about the pre-market futures and take some chart requests. I have a couple from members. If we have time, I'll take some from the audience as well. But I'm not going to go too long today. I have too much to do. So before we begin, I want to obviously pay the bills and talk about our sponsor, which is, yes, me, the Contrarian Trader, but also our friends over at TrendSpider. Don't settle for ordinary trading software. Folks, I have very little time to review all the scans that come up. And what helps me become far more efficient and allows me to speed up my analysis is to run my scans and to use the automated technical analysis of TrendSpider to speed up that analysis and improve my accuracy. It makes no sense to speed up your analysis if you're not improving your accuracy. It also allows you to reduce costly analytical mistakes, find those winning chart setups using the scanning features, and time those trades with precision. They have a 7-day free trial offer, a lot of functionality. Use the link below, 35% off. And I, of course, give it away because I believe in it so much to our silver and gold level members. You can see right here, TrendSpider. Choose your bundle. We're only doing TrendSpider now. We're doing away. Good company. No, I'm not saying anything bad about them. Trading Sim is going away. TrendSpider is going to be the preferred vendor of choice. The reason why we're doing that is a little bit of redundancy. So it doesn't make sense. TrendSpider's added on so much functionality since we first started that it just makes sense to go with one. Okay. Let's talk about Reddit. I mean, that Reddit group wiped out a hedge fund yesterday. It needed to get bailed out. Where is that? I think they got bailed out to the tune of $2.75 billion. Now, I love the internet. I love the enthusiasm of these guys, but with all due respect to them, I'm not knocking them. I'm sure that I was doing the equivalent of what they're doing back in 99 and 2000 with the mindset that this market is not going down. YOLO, I don't know if anybody dropped in their idea of what YOLO is. I don't see anything in the chat section yet. YOLO is you only live once trading. and I almost fell off my chair. I thought it was the funniest thing. However, it did make me somewhat concerned about the herd mentality, the how do I put this? Aggressive. I'm going to say aggressive trading. Overly aggressive trading does not necessarily mean outperformance. Can in the short term, longer term, it's unsustainable. So expect action at some point in time on the SEC with regard to protecting the financial system against these types of Reddit crowds or chat room crowds. I'm not saying they're bad, but what I'm saying is that these people on Wall Street are going to protect their own. So beware. Volatility. GameStop is reminiscent to me of Pets.com. That was the high-flying, make-no-money company from back in the dot-com bubble. Yesterday, the stock surged to a high of 159 and change. I went to look to buy puts on the shares at around, 155 thereabouts. We had RSI 93. I'll put it to you that way. It was that extended. And the shares, or the options, they wanted for the 80s around $35 a share. And I said, this is crazy. And I went drilling down all the way, and this only goes out like a month or two. I went drilling down to the 9 strike price. Even the 9 strike price going out a month or two, they wanted 25 cents for. So crazy rampant speculation here. This is not going to end well. I know they're saying that it's still overly shorted, net shorted, but the point here is that this is a marker. This is not a leading stock, yet they're treating it as if it is one, and it's all it is a lot of cheap money chasing the stock higher, squeezing the shorts. And there's the Reddit crowd. They wanted payback on Citadel. Apparently, there's a feud going on. I had no idea. So, yeah, I see Miguel popped in a note here. GameStop is a bubble. I agree. It's reminiscent of, there are bubbles all over the place. The stock market overall, I mean, I'll bring up this. I put this in the chat room yesterday morning. This is posted by Liz Ann Saunders. And I'll zoom in here. This chart goes back to 1970. Here is U.S. margin debt relative to GDP. I wrote yesterday in the forum 3.5%. We're more likely at 4% of GDP is margin debt. That's nuts. And here, the valuation of the Wilshire 5000. Normally, I reference the Tues or the S&P 500. The Wilshire 5000 is a very, conservative index to invest in because it's so diversified. And even it is nearing the upper band of its 2 standard deviation valuation relative to U.S. GDP. The last time we were there was back in 2000. So there's still a way to go here. We could still go up higher. I'm not calling a top, although I did go adding to shorts yesterday, and I'm probably going to continue to add to shorts. But this is not going to end well. And Morgan Stanley, I think it was Morgan Stanley, put out a research note yesterday, JP Morgan. I don't know what they're doing, whether they're trying to beat down the market to try to buy lower, I don't know. But beware bursting bubbles. JP Morgan, now sees only $900 billion Biden bill passing. This market's pricing in $1.9 billion for starters. So I don't know. I haven't read this yet. I just saw it only minutes ago. I don't know why they couldn't get 1.9 billion trillion. What did I say? Billion before? 1.9 trillion pushed through. They control the House, the Senate, the presidency. So if they can't get this pushed through, they're not going to be able to get anything pushed through. Because they have no concept of money. Not that the Republicans do. But these people have zero. They rely upon cheap money. So I'm going to read through this. If it's worth mentioning later on to members, I will. All right. OPTT. I did a video on this. It's posted on the website. If I remember, I'll link to it. Oh, no, I can't link to a video at the end of the live stream. It's posted on my video section on YouTube or on the website, posted on Sunday. And I mentioned that while longer term OPTT was looking good, I expected a pullback. Not that it couldn't go higher, but it's going to pull back. Sure enough, yesterday, spinning top formation. It did move higher, closed lower. Beware here. I did not go chasing. I set my alerts on TrendSpider. They're down here. If it doesn't get down there, I'm not interested. So set those alerts and let your stocks come to you. Do not go chasing in this market environment. It doesn't end well. We're probably going to pull back here further. Now, the VIX yesterday, spiked up higher. The only problem is with the VIX spiking up higher, the S&P 500 should have closed lower. It didn't. There's usually an inverse correlation. And when you don't get that inverse correlation, if they both close up, it usually doesn't bode well for stocks. When they trade down together, it's usually bullish for stocks. So the way you read into this is that while they were rallying the market yesterday, net, traders were buying insurance out of concern that we were going to get a pullback. So beware here. Be very, very careful. Yes, we closed higher on the day, but we had a hanging man formation, not my favorite formation, on an index that's at all-time highs. So be very, very careful. Let's go to the pre-market activity. I want to begin with the U.S. dollar. The dollar is up yet again today. I want to clean this all up. All right, so what I think may be setting up here is a head and shoulders setup. Left shoulder, head, right shoulder. Here is your 45-degree neckline. Now, when am I wrong? If we begin to break out and above, let's change this. Ideally, with a head and shoulders setup, you get a lower shoulder on the right side. If we begin to break out and above this resistance level here, there's a strong chance that the dollar may rally and this head and shoulders setup is negated. Why might that happen? Why it may happen is because if the market doesn't get that 1.9 trillion and only gets 900 billion, that's dollar bullish. Despite the fact we're still spending $900 billion. It's not going to last, meaning the rally, but it's not going to bode well for gold short term anyway, which is weakening up here. It was up when I went to sleep last night. Hey, good morning, Pat. Sam, good morning. Alex, good morning. Silver, struggling here. The metals are struggling. You know, silver, this is a 4-hour chart. Silver managed to break out Monday morning, but it failed to hold it. Good morning, RL. So the metals are a concern. I've been bullish on the metals, still am. Longer term. Short term, though, they're under pressure. All right, here we go, Bob. Get it together. There you go. Good boy. All right. So there's our triangle formation for silver. Now we're looking for a breakout or a breakdown. It's going to happen fairly soon. Same goes for gold. We're entering that apex of the triangle formation. So a resolution is going to happen soon. I heard that about that prime minister. What do you think? Euro bullish or bearish on that resignation? I don't trust them. They want a weak euro. What's your guess on that? If he does resign? I know that's influencing the dollar some. All right, let's check out equities. All right, the Russell 2000, as much as I want to talk badly about it, it's not a bad setup here. In fact, they broke it out on a 4-hour time frame. Let me confirm that. Yeah, they did. There's your breakout. All right. Just want to set some alerts here so I am alerted quickly. Oh, I always do that. There you go, Bob. Okay, so our alerts are set. The NASDAQ is very weak this morning, but off the lows of the session. I've never seen a down morning look so bullish. Take a look. We're down about 1/3 of a percentage point, and it looks like they're breaking the goddamn thing out. Oh, what a market this is, man. Take note of your RSI, lower highs. Doesn't mean it can't break out. back out. We did the NASDAQ. Where are my S&Ps? The mid-caps were looking weak yesterday. What are they doing today? They're down slightly. Consolidating. Not much going on here. S&Ps. Okay, S&Ps are down slightly, but it looks like they're going to try to break it out. You know, for all the markers that I'll point out, you know, we don't speak our book here. I think this is an extremely frothy market, but we're not going to look for bearish signals on the charts to support our opinions. If it looks bullish, then it's bullish, or else we're just kidding ourselves. But I want to have early warning signals all over the place, letting me know, because that sell-off yesterday came very, very quickly. And that's not a modern thing. That's what a typical bull market sell-off looks like. Big gains get erased in a heartbeat. Today is the 26th, right? Yeah, okay. At or below. I want to know if we take out yesterday's lows. If at some point we take out yesterday's lows, you know this market has a bunch of trouble going on. So our alerts are set. I'll create another alert just in case we do break out here. Okay. What else do we have? Oil up. Natural gas broke out. Pat said that text from Art yesterday about nat gas. He nailed it. Here's nat gas. I got to clean this chart up. So we broke out. This is a 4-hour time frame. We broke out yesterday, retested the breakout point, off to the races, nat gas looking bullish. Good morning, Big Bear. Miguel, the Biden administration, there is a lot of self-fulfilling prophecy on a green energy companies like NextEra since December 7th. Yeah, a lot of optimism out there. Yeah, and they could keep doing that, Pat. We've seen it before. The problem is this is when you kind of know that you're very close to the end. You get a couple of days where you get bright green futures. You wake up, you have the Dow triple-digit futures higher. You have your NASDAQ futures up double digits, S&Ps up double digits. Everybody's optimistic. It's a great day. CNBC, they're touting whatever new BS piece of news they're using to spike the market. And then all of a sudden, by 10:30, 11:30, at least by the close, you're red on the day. Everybody went running in, buying the market. By the close, you're closing down at the lows of the day. That's when you know. That's when you know that things are going to get real fast. And you're right. They salvaged the market yesterday. That could have turned in to talk about a snowball effect. I mean, that could have been a monster yesterday. Look at this. Gasoline prices ripping. There's no inflation, folks. There's no inflation. Listen to the Pimp Mac Daddy over at the Fed. Jay Powell knows well. There's no inflation. And if there is inflation, well, they're going to back out food and energy out of core CPI or out of CPI and only go by the core. Look at this. No inflation. Corn prices. Bullish reversal bar. And this is a weekly chart, no less. Oats. Bullish reversal bar. Food prices are going up. Wheat. Bullish reversal bar. The week isn't over yet. Maybe they'll close it down for all I know. But, man, this looks like the makings of a continuation breakout on food prices. Look out above. All right, let's do some chart requests. First, we check out yields or bond prices. All right, bond prices were up yesterday. They're down this morning. So if bond prices continue to weaken and yields rise, look at the banks today. The banks are probably going to look pretty good. Did you see on gold the gap? What time frame, Sam? I'm not really seeing a gap on gold. All I'm seeing is a potential ascending wedge formation, which is freaking me out. They better get gold moving really quick. All right, let's take some chart requests. I have for Eric, XL, Jason, OEG. All right, XL Fleet. Oh, we went over this one the other night. So I had an alert fire off on this yesterday. Laser fired off too. Yeah, here it is. So it hit support. It did bounce off of that support level. This is a weekly chart. Let's go to a daily chart. Where are my Stokes? I think this could be bought, but I would stay very, very small. The reason is this, is that you have a lot of overhead supply here. You're at support. It tested support yesterday, and it held. Where would I put that stop? Either just below the lows of yesterday, which is at 1890, or to be a little bit more liberal, right below the lows of the 21st of January at, 1851. Or if you wanted to split the difference, I didn't want to do that. Do this. There you go. A break below this support level at around $19 a share. That's not splitting the difference. It's actually being more conservative. So that's another option as well. If we break this lower band of support, we're probably going to take out the lows of the 21st. Now, if we go breaking out above resistance at 20 bucks a share, maybe you want to nibble a little bit more, but I wouldn't get aggressive until we closed above where I have this alert set at 21.89. So nothing's changed here. I think it can be opened. Your Stokes are improving. They're beginning to hook up, but there could be a lot of backing and filling here. So I don't think it's going to be a straight shot higher. We're probably going to enter into a consolidation. So nibble now, tight stop, add more on a breakout, and then add a bit more aggressively on a breakout and above 21.89. OEG. All right, so to me, this can't be bought. It doesn't mean it's not going higher. To me, the risk reward is just not there. You're trading magnitudes above the third standard deviation Bollinger Band in red. Weekly chart. Same deal here on a weekly chart. So at some point in time, you're going to get a retracement either down to a filling of the gap, or an even greater probability is a pullback to this support level, which was the breakout point. Then I would entertain getting long. We'll keep that active for a while. That's what I would do. I would forget this stock exists until it came to me. And it's going to. Even on a daily time frame above the 3D Bollinger Band, be very, very careful here. How much time do we have? All right, we'll take two more because I don't have much time. NEE, Nextera, very nice chart. Very nice chart. New monthly high. You should have support at 83.18. Weekly chart. Same deal here. Very nice chart. New higher highs. Stokes looking good. RSI looking good. Daily chart. It looks as though this is going higher. Nice looking chart. You broke out yesterday. Solid chart. RL, TDOC. TelDoc. You can see I already had alerts set up for this one. Got to go to the daily. I want to clean this up first before I talk about it. Okay. Now we're good. A very nice breakout here. You should see support at 251.02 if we pull back next month. Very extended on a weekly time frame. I couldn't condone buying these shares right now. They're probably going up higher. This needs to get alleviated. I mean, this is a second consecutive week with trading above the 3D Bollinger Bands. You're not supposed to be there. You could definitely get a better risk-reward entry point. Look what happened yesterday. Tapped that 3D Bollinger Band. They pulled back. That doesn't mean it's not moving up higher. I'm not trying to poo-poo the rally here, but I'm looking at things from a risk-reward benefit. And there's far too much risk. And you got to hope you have enough reward. And I don't want to do that. So it's a great chart, good looking. It warrants a pullback before entering. And with that, folks, I'm going to say everyone have a profitable trading day. Stay safe. Don't chase this market. And I would strongly encourage, I for those that are younger, wait for that final hour of trade. Watch the close now. You're starting to see a lot of markers of a top here in this market. Doesn't mean it's not going up for the next month, week, days. I don't know. I'm not that smart. But I know the markers. And when volatility picks up like this, if you're not waiting for that final hour of trade to get informed about how we're closing on the day, that's a true health of a market. It's not how you open. It's not how you trade intraday. It's how you close that matter, because that's the institution setting up for the next day. And if they fail to hold a morning rally and you're closing at the lows of the day, that's big trouble. That deteriorates confidence. Margin debt is through the roof. So when this goes, those margin calls are going out. And you're going to see forced liquidation. So be very, very careful. And again, I'm not calling for it today. I've been around for a long time. I've seen the dot-com bubble. People are calling for a correction of that bubble months in advance, right before it happened. But it did happen, and beware. But I can tell you, volatility spiked right before it went. And you saw that yesterday. So be very, very careful. Have a great day. Be well.